Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, December 12th, 2019. It's about 3 o'clock Eastern Time, so about an hour to go before trading, and I wanted to do an update on some of the trade ideas that I've highlighted recently. The common theme still to me is, that the opportunities lie in stocks really outside the broad market. You're not going to, Apple, Microsoft, so the world, those guys are going up with the market, but not much. Here's the previous high right here. I'll just do a quick update on the indexes, and then I'm going to roll right into these trade ideas, and I'm going to go fast, but I'm going to show you how to follow up or look at the previous notes on some of these trade ideas that I wanted to update today. So here's that chart. Remember, we had that trend line this morning. We bounced off. We hit that right about the open. Trump tweeted out some good news on the trade wars. We popped, faded most of that rally, and we're wedging up here. So to me, it still looks like this is a bearish rising wedge pattern. You have them on ES as well. We're looking at NQ right here, the NASDAQ 100 futures. QQQ, but they don't show as well. You don't see the after hours trades. There's a little bit of a zoom in there on ES. So we're still within there. Zero sell signals. The market is up, but we'll watch that because you break down, if the futures break down, it may put the brakes on some of these trades. Now, I'm going to roll into the trade ideas. And again, the common theme that I've been highlighting recently is I may speak a bearish speak on the market, and that's just how I see things. That's how I see the divergences, overbought conditions. I don't chase stocks at all-time highs. There's no resistance levels to target. All you have are support levels in which to either buy dips on pullbacks to or short on a break. And so that I'll speak of these levels to watch that would trigger the next correction in the or pullback in the broad markets. But yet, as I've said for going on months now, 95% plus of all the trade ideas and that I've shared and done personally are other than quick pullback trades on maybe commodities, natural gas here or there, shorts on crude and natural gas on, but most of those trades have been long trades. Now, as I go through these, I'm just going to go over the the swing trade ideas that I've highlighted in these videos over the last week or so, and I wanted to show you how to find the previous charts. Maybe you're new to the site, maybe you're just catching up right now, you're a member of the site, but you haven't caught any of the recent videos, or you didn't sit through them all. When you go to the home page, you'll notice here, if you click on home when you're logged in, this is the home page you get, and these are the posts. So for example, last swing trade idea video from yesterday, you can see as I highlight where it says tags, these are the ticker symbols of all the securities covered. Anytime I make a post, anything related or covered in that post is here. So if you wanted to find out about log me in, LOGM, you click on that tag right there, and you can also do it when the post is open. That's the first time I've mentioned. Otherwise, you'd have additional posts right here. So for example, you hit QQQ, would have covered QQQ in the video. Everything on QQQ in chronological order or reverse chronological order. You can go back in time. All right, so that's how you get to find what you're looking for. And one other way to find it as well is go to the support center. If you click resources right up here on the top, you have all kinds of stuff. Account settings right here, frequently asked questions, how to use a site. I'm going to continue to work on that. Tools of the trade, position size calculator, all that good stuff. But what I wanted to go with this is down here. Those symbol tags, again, they only include front page posts, not things in the trading room. You want to find something in the trading room, you type it in here, and then search. Well, I didn't type in anything there, but here's the symbol tag. So if you want to go to log me in, for example, again, LOGM, oops, yep, there it is. Hit enter, and again it'll do the same thing. It's a hyperlink to any front page post tagged, and again that's the first one. Okay, so now what we're going to do is go through these quickly. Now that I showed you how to find catch up on any additional or previous analysis on something I've covered recently, I'm going to talk fast because there are a lot of trade ideas, and here's the ones I'm going to basically cover right here. Where were we? Swing trade ideas from the other day, going back to about this point right here, just a few days ago, about 6 days ago. I covered these. A few updates since then, some commodities. I'll get through as many as I can and keep the video doable. I don't want it to be a 45-minute video. Alright, so again, that's why I'll talk fast and go through these quickly. In no particular order, I covered crude oil this morning, so I guess I'll touch on it real quick, but that's it. It's up today, and I already covered CL this morning, so I don't want to spend a lot of time there. Highlighted it, as a long objective long on a break above 58.67, and it's been trading that above that level, but not really moving impulsively. The energy stocks are moving today, and again, those are trade ideas. I'll get to those in a second. But a little bit skeptical of this rally. We have the negative divergence, and we've held that level, that 58.67, but we're not moving above there. So as of now, I'm holding off on making XES or XOP or XLE official trades. But again, I like them. I have positions. Manage it with stops. I wouldn't overweight it at this point in time because of the concerns that I mentioned in the video earlier today. Let's just jump into some other ones here. Update these again in no particular order. I just kind of jotted down from the previous updates. Acor, I believe that one was already stopped out, but when I highlight it again, I still like it. It broke out. It had a false breakout. That's where we took it. I believe it was there. I had a tight stop on it, if I'm not mistaken. I can't remember the exact trade parameters. And it back tested the wedge, and it's starting to move higher, up another 7.39% today. Let's do this now. Let's give it a benefit of the doubt trend line. Let me revise this trend line as we do this and say, you want to play it safe, a solid pop. See, we popped above that trend line intraday. We're right back down on it. So I'll just leave these targets in place because they still would come into play if the stock can break out. So there's one. And again, very constructive chart, biotech stock. I'm going to breeze through these, so I highly recommend you reference previous notes because I may not get into all the nitty-gritty like I like to do. I go off on tangents talking about how aggressive and risky biotech stocks, especially low-price biotechs, are. I did it just now, but I'm not going to do it on every trade. So if you are interested in any of these, again, if you visit the other videos, you'll get the notes there. ASNA, Essentia Realty Group, Retail Group, sorry. There it is. Looks good. Still above the dual support lines, trend lines, I should say, uptrend and downtrend line. Needs to take out that previous candle, but a lot of upside if it does. All right, Camping World. This one is an official trade. It's also what I call growth and income trade. It's categorized as such because it pays an attractive dividend and there's growth potential. So we broke out here. We already hit the first target last week, and we had the typical reaction. I define a reaction as a pause or consolidation and or reversal off that point. That's a reaction. We consolidated. We hit that target. We bounced around that resistance line right here. You can see that for a few days. And now if we can take out this previous high, and we've already had a reaction, a consolidation, so I think the stage is set for another move up. Would certainly help, even though this one's probably not a component of the S&P 500. If it is, it's probably way down there. I'm not sure. But it would most likely help for the market to go up. Again, that's why I start with analysis on the markets. We get a breakdown. If you get a broad-based sell-off, chances are it'll put the brakes on quite a few of these trade ideas. So just keep that in mind. But hey, it's like a game of musical chairs. As long as the music is playing, have fun. Just don't be the last guy or gal standing when the music stops without a chair. Meaning, in these momentum trades, if the market were to correct sharply, a lot of those would go down. Bitcoin, I highlighted recently. It hasn't done what I wanted to yet, but it still looks like it could move. I see positive divergence down here. I see it at support. Again, I updated it recently, but it needs to break out, and it hasn't done so. It's at support. Needs to take out that trend line. Let's see if I have anything on the 60-minute chart. That was our last trade, but you could replicate this. Take a downtrend line on the 60-minute chart. Give it something like this. And there you go. Still has the divergence right now, positive divergence, and needs to pop here, and then that one could run. There's some related trades to that, which I'll get to in a second. Again, I just jotted these down in no particular order, but I'll get to Riot and Overstock, which are sort of proxy indirect Bitcoin plays. So on those, obviously, it would help to see Bitcoin rally. GTT, I mentioned that one on a break above 1073, and it's already moved up pretty nice. It's in that thin zone. It's up about 22% from that breakout. Taking a little breather today, and certainly overbought. May want to come back in and back test. So two ways. If you're in it, you just trail your stops up or keep a stop at break even now. And if it pulls back to 1073, you can get it on a back test with a stop somewhat below. And again, I've talked about this one quite a bit recently, so you can reference those previous posts. IWM I mentioned as, I didn't take it, but I said you could back test here, that 159-ish level, and so far it's moved up. Negative divergence, just like the stock market. Although December is typically a bullish month, the momentum is strong now in the market. Like I said, watch those 60-minute wedges that I started out this video and I covered earlier today, because I think we're going to get a decent correction, decent pullback, 3-5%, maybe more if they break. But until they do, the trend is up. So you can play these momentum stocks or these, these stocks with the best chart patterns as long as they're there. I'm going to add a second trend line to MERC. I showed you this one is a breakout and a back test right here, but it continues the back test. Break of this trend line, a lot of reactions there. I think will trigger a pop up to that 1332 level. That's about 6-7%, and then if we get up here, take that level out, you have about 25% upside. That's paper product company. All right, OSTK, as I said, I proxy Bitcoin trade because they're into cryptocurrency and all that, whatever they do there. Used to be like an Amazon, and then they kind of morphed a lot of their business model, what they do, and so therefore it'll trade often with follow Bitcoin, but it's poised to break out. You can see that it needs to just pop above this bullish falling wedge pattern. It has positive divergences. First target there is 919. Again, odds are going to be in your favor if the breakout does occur. If you get see a breakout in Bitcoin too, or GBTC, as I just showed you earlier, it's about a 21% upside to that target right there in overstock. And I think again, depends what Bitcoin does. If it's rallying hard, it could blow right through there, but it's a pretty solid, pretty decent resistance level. If you get the 21, get in, get out, and move on to the next one. But constructive looking chart. This could be a bottoming play here. You have positive divergence on the daily, so the stock could go up quite a bit more. So the other option, if you don't book the quick profits, if that target's hit, raise your stops. If it goes up and hits that level, that's about a 21% gain. Maybe give yourself a 5% or 7% stop loss. That way you get back some profits, but if it has a reaction and then heads higher, it keeps you in the trade and you might get 50+%. I know this stock and I've traded it many times. It can go up 50-100% in relatively short order. It's just the nature of that overstock. PBYI, speaking of another one with a lot of potential, small biotech stock. Unlike a lot of the official trades lately, this one I believe is an official trade if I have all these parameters here. It came very close to our stop, but hasn't hit it. So that story of 2019 has been come down, hit the stop losses that I put there by a penny or two. It's almost as if the algos are watching. If I was some huge mega site where we had thousands of people trading the same stocks, maybe there wouldn't be enough stop loss orders for them to go and get it. Maybe there are enough stop loss orders, or maybe the levels I'm seeing are the same one other people see. I try to set my stops a little bit below or away from where I think the most logical clusters are. Either way, they didn't get this one yet. Looks good. Breakout back test of the downtrend line right there, and moving higher so far, and has still yet to hit our first target there at 1235. Second target's at 1955. So from where we're at today, roughly, if it gets there, that's about a double on your money right there if it hits that second target. PBYI, just don't let it get away from you, and again, know the risk of trading small biotech stocks. RIOT, another cyber cryptocurrency play, proxy Bitcoin trade, just like overstock. Probably not coincidence, they're both setting up in these bullish falling wedges with positive divergence. So you see one go, you'll probably see all three go within relatively short order. And again, low price, a little company here, but just tremendous amount of upside potential if these targets are hit. 80% if that, or about 83% if that 245 target is hit. And even that first target would be a pretty nice lift from about $1.30 up to about 181 or so. It's also its support. It's a little bit aggressive, but you could take a long position here at support, that 130-ish support, with a stop somewhat below. And that way, if it breaks out or gaps up above there, you already have a position. Maybe just take a starter position now and add to it if and when it breaks out. And again, don't fall in love with any of these if they go the other way. Have your stops in place wherever that stop is for you, and stick to it. If they stop you out, you can always get back in if the chart firms up. Sage Pharmaceuticals. Here, I just updated this in the trading room. Took some profits on the swing position, and what that is you had what was it, Thursday, a week ago today, we gapped down. Big news, clinical trials. Great example of biotech stocks, how they can hurt you if you're long. Now, fortunately, we didn't have a long position there, but I pointed out it was trading. You can see right here at the time 59.70. So I said long entry here for either a day trade bounce, and it went up, I think, gosh, close to 20% that day. Yeah, it was, because that was a high that day, and that's where we're at now. So you could either day trade it, pop, and some people did. I got that a couple people said they took it and got in and out, and others took it as a swing trade. And so there it is. So you can either day trade or swing trade, I said, with a stop below the lows of that day. And that was then. This is today. Now I just posted in the trading room. It's rallied to about, again, you got 20% the first day, or swing traders that wanted to hold on to it. It's up back to that level, and there's a good chance the stock will pull back. That levels like that, when you have a big gap, although the stock gap down below here, that was at intraday pop. That's where you're probably likely to see some profit taken today. So at objective time, take your 20, 21, 22% or so from that price that we entered. Of course, depending where you got it. There it is. That was at 59.70 level. Popped that first day right after that. Came back down to right about a little bit above our entry price, and worked our way back up. But again, you can see there's a reaction high, and so my guess is the sellers will step in here, take your 20+% run, or if you believe it's going to go up, and it may. I listed some additional targets on the original setup. You can set stops and trail it up. Now the tricky thing about that is if it closes here tomorrow, it may gap down and they may bypass your stop. So you might say, okay, I'll set a tight stop, maybe 2, 3, 4%, and see if it can ride. And that may very well pan out. You might get 40, 50, 80, 100% on this stock in the coming weeks to months if it continues up. But it could gap down below your position. So this thing was the story of this. The reason I took it, originally and posted it, it's just an oversold overreaction down to a well-defined support level. Game that initial bounce and get out. So again, you might get some more out of it, but my preference is to move on to the next one, take that money and deploy it into the, put it in cash, have dry powder for the next trading opportunity. All right, next up would be SIG. I mentioned Signet Jewelers. That one posted back here as a breakout above 1869. It's moved up and already hit the first target now. That's why I wanted to do this update here. I'm trying to grab it there. Close enough. We're at 1873. And it's run up about 17% right there. Yep, about 17%. Hit my first target right now at 21.95. And so not a bad place to book profits. If you're new to the site, remember on these unofficial trades, these are the actual resistance levels. If I say T1 equals, that means I've done an adjustment. That's usually for an official trade or a trade I'm considering as an official trade. So on this one, 21.95, you want to sell at about 21.89 or so, a little bit below that level. Because I think, the way I view it, it's a well-watched technical level. If everyone else is waiting to sell there and people start stepping in early, you may miss a fill. The high of the day so far was 21.98. No big deal. You got, if you were holding out for the full thing, you got it. And the chart looks constructive. Remember the whole premise. It wasn't just a quick, get in, get out day trade. It's been basing here in this range. Put in, I don't know why the line's not here, had a divergent low, big divergent low right here. It's been building bullish divergence, had a divergent low there, broke out, came back in, positive divergence came up here, consolidated for months in this sideways range, building up energy and impulsive breakout. And so it could easily continue higher. But again, at this point, you hit the first target, you either book partial or full profits, or if you're going to hold some or all of it, you raise your stops. Where would I raise them to right now? Right above, right below that recent cluster, a little bit below it. Give it a little bit of room, maybe the halfway point if you're holding out for more. Otherwise, get in, get out, and move on to the next one. SLB I covered last week. Schlumberger, it broke out since then. I think I might have updated that today or since then. 1, 2, 3, 4. Nice, just nice move since the breakout here. Already up, rallied about 10% or so, and still looks constructive. Again, see my comments from earlier today in the video and everything else regarding oil and the markets as to whether or not these breakouts are going to stick. But like I said, some of the best looking charts right now that I can find are in the energy stocks. Energy stocks and little low price biotechs. These are a little less risky, most of these energy stocks than some of those smaller biotechs, but they both have a lot of upside potential. And of course that cuts both ways if these breakouts fail and crude oil takes another leg down. TZOO Travel Zoo mentioned as a breakout above this bullish falling wedge. It has broken out, but you need to also break above, I think, that 1081 level to be safe. There's a horizontal resistance, so a little more upside, pretty much above today's highs. So it looks like we kissed that level today. High of 1081. Yep, that's it. And I believe, if I'm not mistaken, I would have mentioned that in the previous updates, that you need to be safe. You need to see 1081 go, because we've broken out of the wedge, but we haven't really followed through much. So pretty much, a break above today's highs, ideally on above average volume, and also if you can get a solid close above that level, that opens a door to the next target. And you can see these are pretty, a lot of upside potential in this one if it plays out. That's about a 13, almost 14% gain to that first target, above the 1081 level. That is 28% gain, so forth and so on, 44% you can see. So a lot of potential there, but I still can't rule out. It's so close to this downtrend line, it wouldn't surprise me to see it come down here. Could go either way. Just trade it accordingly. Breaks out, set your stops, and that way if we come all the way back down for a back test of that level, you're not burned, and maybe you could jump back in there if it still looks good at the time. XES I already covered today, so I'm not going to go over that. Still, so far the breakout looks good. Corn I mentioned, along with some other commodities recently, pushing up against that downtrend line, poised to break out. Positive divergence in place. Maybe we thrust down within the wedge one more time, maybe not, but that's one on my radar for sure, as are a lot of these other agricultural commodities. Cotton BAL, it's a cotton ETF or ETN, breaking out above that 39.26 level today pretty impulsively. PPO is turning back up at the 0 line, which is bullish when, and I'm talking about the 9 EMA, the white line, the signal line. Bullish when above there, bearish when below. So once you break above that 0 line, the dotted line often acts as support, and so I like this chart. And again, it's another way to also have something in your portfolio that no matter what the stock market does, this thing marches to its own drumbeat. Cotton doesn't care about what the what Microsoft and Apple and Facebook are doing. DBA, as I mentioned, this is a shotgun approach. If you want to have exposure to the agricultural commodities via an ETF, this is one of them, DBA, and it's up another % today. It's taken out the top of that channel, taken out the 1640 level. Still looks good up here to at least 1691. And again, I'm also viewing a lot of these commodities as potential bottoming plays. Where you can position for a trend trade or an investment that may last a year or more if commodities put in a bottom. I believe I think 2020 will probably be a good year for commodities. And if nothing else, it's all about asset allocation and diversification in your portfolio. Don't put all your eggs in one basket. And that doesn't mean spreading among 10 different stocks. If your 10 stocks are all technology stocks, or you have, let's say, 5 mutual funds, but you have QQQ, SPY, IWM, they're all index funds, they're going to move up and down together. That's not diversification. You can have 100 mutual funds. You're not diversified if they're all chasing the same basket of stocks. So proper diversification, asset allocation. You don't need a lot of positions. You can build a portfolio with 10 or even less positions, as long as they're spread among different asset classes, stocks, bonds, commodities, precious metals, things like that have very little, if any, correlation to one another. GCC, Wisdom Tree Continuous Commodity Index Fund, another proxy that I've mentioned for trading commodities, where this is really a one-size-fits-all. You have your agricultural commodities and your oil, energy, your hard and soft commodities. Boom, hit my 1845 target today. So that's getting a little stretched there. Some potential divergence forming. How you do this, you want to take profits. Again, I'm looking at these as a potential bottoming play. You could take profits there if you've been in it from anywhere down here, or you could just tighten stops up and let it ride. This one could certainly power through there. Like I said, a lot of the commodities charts are looking constructive. This chart alone, if I couldn't take a look at corn and wheat and coffee and soybean and oils, I might say, yeah, time to get out. But as they still look promising. My preference, especially for a longer-term investor, is just raise your stops and let it ride as long as the commodities look good. All right, a few more, and this brings me up to the most recent. I think these were yesterday's trade ideas. I'm on now. DSKE, trucking stock. Had more follow-up today, up another 6%. It took out that 328 level. I believe that would have been the level I mentioned had to take out. We had broken out yesterday above this symmetrical triangle pattern, these two lines right here. And then today we took out that 328 level, and nice volume so far and a nice impulsive move up 6%. And the next buy signal will come on a break of that longer term, more significant downtrend line there. JMEI. This is a retail stock. Still, looks constructive here. Retail sales come out tomorrow morning, so just a heads up there. I don't know if it's going to move this one or not. If it doesn't go or does go, the way of the report, we'll see if it's a bullish or bearish report. But needs to take out 198, that downtrend line, then it could run. Not one of my favorites really, but like I said, I just highlighted it, so I figured I'd update it today. ORMP, Ormed Pharmaceuticals, I mentioned this one it's a biotech stock, as a potential bull flag. Moving out of the flag, not very impulsively so far right now, and still has pretty big resistance at 529 or 579. I'm sorry. So really needs to punch solidly above 580. Let's say $6 should, if it can do so soon. And that way it might be, that's what you want to see ideally coming out of a bull flag pattern. You want to see an impulsive move up, just like you had an impulsive move leading up to the flag. You want to see an impulsive move on the breakout. And of course you need to take up that previous high there. Sage already covered. FCEL, let's see. That one was mentioned yesterday. There it is, another one breaking out. A lot of these trade setups recently. And guys, there's so many of them. My focus is to find these trade ideas and update them. I know there's not, I haven't taken the time, nor do I have the time to get down nitty gritty and put and list them as official trade ideas. It takes quite a bit of work to update all those charts, identify the levels, post updates. I'm still have trades that have been stopped out that I haven't gotten around to moving out or recategorizing on the active trade categories. My apologies on that. But I can spend time doing that, or I can spend time looking for these trade ideas. And right now, a lot of these guys are popping. This guy's up another 25% today. There it is, really, break out above that. What is that, 62? It's a resistance zone, these two lines there, and it hit that 74-cent target so far. And if it takes out today's highs, the next stop is 99, and if it gets above 99, that's pretty bullish. This guy can run. I've traded this stock many years over the years, and when it wants, see old trend lines from years ago, and when it wants to run, it can run. So there's FCEL, high risk, high reward potential. It goes hand in hand. NK up another 13% today. Took out that 194 level with conviction. Boom, right into the downtrend line. Beautiful display of technical analysis. It's up 13% now. It was up a little higher earlier. Next buy signal to come on a break of the trend line, and the next target is 266. So congrats to those that caught that one so far. LOGM. Log me in. Somebody had mentioned in one of the comments section under this post yesterday when I covered this one, there's a couple of private equity firms, I think, in talks for buyout talks for this company, and asked my thoughts on that. And I took a glance at the article. They're in talks, nothing definitive yet. So my response was this: it's nothing but net bullish. It wouldn't be so bullish if those new headlines came across and the stock, let's say I took a look at this chart, and the stock had done this over the last few weeks. If that had happened and the news headlines broke here recently, I would say, guess what? a little birdie already leaked all that. It's priced into the stock, and I'm not going to chase it at that point, because when the buyout, if and when it's announced and finalized, guess what? It's probably going to be at 106 or 112. However, no, that's not the case. This one is coming off a beautiful, chart pattern, broke out of this small wedge right here impulsively. You see that? Did a bull flag pattern, broke out again. Bull flag, took out the next downtrend line impulsively, came in, back tested that 72.85 support, next leg higher. It just couldn't look better. Now, it doesn't guarantee the trade will play out, but this is just a very constructive bullish chart in a stock that's bottoming. It's come down, and it's already fallen 53%, and the bottom appears to be in. So like I said, maybe if the buyout is announced, maybe it'll come up to 85. They buy it out. That's just the next target, next resistance level, but it could come in a lot higher. Or those talks can fall apart. And here's the thing: if they fall apart, again, the stock's already beat down, so it's not like it's rallied 100, 200% or a huge amount on those talks. That's where you have a risk in buying a stock where there's rumors of a buyout or talks of it, but it's already priced in. So again, those are my thoughts on that one. So nothing's guaranteed, but I still like it. AXU, covered that one recently, and it's at that resistance level. Let's move on. Nothing really standing out. ALO covered yesterday, I believe, and that was a gold stock I mentioned. I forgot to add that other divergent low right there. I think I covered it in the video. Down today, and that's fine. I think that's I haven't even looked. Gold got knocked down earlier when the markets rallied, but this chart's still constructive, by the way. It's just right now maybe not the most actionable trade. It's going to need gold to rally to really get it going. FPRX, 5 Prime Therapeutics, more follow up right now, up about 3.5%. It was up more than twice that earlier today. Breakout right there above that 433 level yesterday, and it's following through today. That's bullish. Breakout and then an additional green candle. Next target's 515, then 649. Unadjusted targets. All right. ATRA. More follow through. Broke out recently above 1439. It's headed up to that 1749 level. It looks to me. Set a stop somewhat below the 1439 level. That should be support, because resistance once taken out should act as support. But constructive looking chart there as well. AGX. This one I mentioned yesterday is a bullish engulfing candle, and if I didn't mention it then, just as with a bearish engulfing candle which comes after an extended uptrend, that's a topping stick, this is a bottoming stick, and what I like to see, and now we are seeing, is follow through the next day. You want to see a green candle. Sometimes you get these bullish engulfing or bullish engulfing sticks like that, and then you don't follow through. This is what you want to see. That is a check mark. It helps to confirm. Nothing is 100%, but it greatly increases the odds that this is a bottoming stick. And this one's up another 2% right now today. And again, if it's a bottoming play, that's what these sticks are, then there's a lot more upside. This would mark a trend reversal, and this one would most likely hit these targets that I have up here. Any or all of those. that was AGX. PUMP, I mentioned yesterday, and more follow through today, up another 1.74%. SEMFF, I mentioned yesterday, I missed that. There it is, SEMFF. Up about a little over 2% today, still coming off that divergent low and that support level about 177. Next target remains about that 214-ish level. RES, more upside today. Well, what's going on? Showing flat right now. Okay, but here's another energy stock. That was one I must have mentioned yesterday. And then finally, Blue, BLUE. Bluebird Bio already hit, I guess yesterday, maybe after that video, I can't recall, when it hit that 92 target right there. That was that target. Hit a high of 92.05 versus my target of 92. Boom, pull back. That's your typical reaction. That's healthy. You know, nothing wrong with a reaction off a level. As long as that reaction, I would say the pullback should ideally stay above about 80, 81.50 or so. You know, you have to trade these biotech stocks. You can't use 2-3% stops. You might as well move on, trade something else. These are stocks that can go up and often do in a single day double digits. That green candle right there is a 13% move. So you have to use larger stops and just take smaller position size. And so far, a little work to be done. I want to see this PPO cross back above the zero line, but you can see nice volume on it lately. And to just wrap the video up here, the next buy signal coming to break above 92 or that recent high, a little bit above 92. Pulse of break, especially a solid close above that level, should open the door to more upside there. And again, biotech stocks, so don't put too much into it, because sometimes you wake up to a bad surprise. Sometimes it's a good surprise. Clinical trials can go the way of the company, and sometimes they go against it. So just keep that in mind when trading these biotech stocks. I think that's it. It's a long video. Again, I wanted to pack in all those. I know I talked fast. Pause the video, and again, you can use those tags on the site to find any other comments or charts or anything I posted on these, or really any stock. You can go back years. You can go back to 2012 on some of the, if I have analysis on any of these stocks that far back. Okay, we're going to wrap it up here, and I'll probably do an end-of-day market wrap today. Oh, FYI, I'm going to be out most of the day tomorrow, possibly in by the close, but I've got to be somewhere at 9 tomorrow morning, and it's probably going to take all day. So I just wanted to make mention in case I forget to post that on the site. I will be out most of the day tomorrow, and we'll get back to any questions as soon as I can. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.